I want the central banks to fail so bad they go back to just making enough currency and money available and quit trying to run the economy from the top down, as if any of these people who never had sex or run a business know anything about the economy, and they don't. I'm telling you, this tightening is already slowing the stock market more, and it's going to slow the economy. I think within the next few months, we're going to be in a real recession, and then it gets kind of too late. I'm predicting gold goes down to 900 to 1,000. So anybody thinks gold's going to protect you here, good luck.
In today's video, Harry Dent, author of 0 Hour, discusses what's up with bonds, the next moves of the Fed, the raging inflation, and the coming recession. Before listening to him, please ensure to smash the like button and subscribe to the channel.
It's all the Fed. You got to realize the bubble, the first bubble that happened in 95 to early 2000, that was what I call a natural bubble, like 25 to 29. The baby boom was spinning like crazy. Inflation was coming down from their strong productivity. Everything was going right. Just like 25 to 29, that was 95 to 2000. That was a natural bubble with little government stimulus, okay? They're making things easy, but it was the crash, that came in the next top at 2007 and the 2008 downturn, which is I've been forecasting since the 80s, early 80s, that we would see a top in late 2007 and baby boom spending, and then we go into a long-term weak period from 2008 to 22 or 23. So we go into that now really weak period, and we have a serious recession, and that's when the Federal Reserve and central banks just said, Mario Draghi says, I will print unlimited amount of money. He's telling short sellers, don't dare short this market. I will blow you out of the water. Now that is horrible fiscal management, okay? To be playing that type of battle with short sellers and markets, okay? So the Fed is the one that so the boom from 2009 to late 2021 in stocks was 120% artificial, not fundamental strength. Just them stimulating more and more and more and more to keep the stock market going up. So at least the wealth effect made the top 20% of people, who spend half the money, by the way, feel good enough to keep the economy going pretty good, okay? And now that started to fail. Why? They overstimulated, as I said, in COVID, which was a natural thing. Why would you overstimulate? Why would anybody feel like there's something wrong with the economy if we slowed because a lot of people got sick in a short-term thing, okay? That happened in 1918 to 20 as well. So that's what happened. They overreacted to that. Now they have to tighten. And I'm telling you, this tightening is already slowing the stock market more, and it's going to slow the economy. I think within the next few months, we're going to be in a real recession, and then it gets kind of too late. If the stock market, by the time the Fed realizes, now we over-tightened after overstimulating, and we gotta stimulate again, they're not gonna have much credibility. People want to say, like, well, you did that in time before, here's how we got in this mess. So I think the Fed loses credibility here. And so the thing to watch for, that's why I'm telling you, the best signal I can give you to get on alert, first of all, why not lighten up now in this nice hefty bounce, since we've now finally shown that the economy can go down despite all this endless stimulus and endless bubble. But that 10,088 is the line in the sand at this point. We break that convincingly, it's going to be hard to turn around. Investors are going to turn around from, oh my gosh, you just buy the dips, buy the dips, buy the dips. We've been trained that since 2009 and even longer, but especially then, it's going to be like, oh my gosh, protect yourself. Once you get people that scared, you can't bring this back with any amount of stimulus. So frankly, the Fed caused this last bubble totally, and now they're forced to tighten from overdoing it, and I don't see any way to prevent it from here once it gets a little worse and people see, oh my gosh, yes. This is the same exact thing. It's different when you're booming because a generation is growing up, getting more productive, earning more money, spending more money, bringing inflation down with their productivity, because as people get older up to the point, they do get smarter and better workers. It's another thing when it's growing only because the government keeps printing more and more and more money. That is taking a financial drug, a toxic financial drug, which when it finally goes down and fails, you have a hangover. So we're going into a hangover. And then again, once it gets to a certain point, it's hard to revive it because People were skeptical at first when every time we slow down, we just print money. Every time there's a stock market, print money. But the government did it long enough that people are like, well, it's working. Well, it's not working now, and it's backfiring on the central banks. And again, there's no way that Jerome Powell, after finally tightening way too late, after overstimulating, as we've been talking about, if he turned around and pivoted on this, it would look really ridiculous that he tightens a little bit and has to turn around and go back to easing. That would prove how weak the economy is, and it would make the Fed look reckless.
What about a pause? What about a pause?
Well,
I mean, what impact?
That would be the smart thing to do. That'd be the smart, just say, okay, we tightened, but it seems like the economy's reacting a little too much. That would be the smartest thing to do, is pause. The markets would like that. I still think the economy is now at the point where it's going to keep weakening. It's not tightening. This economy has been going only on escalating stimulus. You don't have to tighten to end this bubble. All you have to do is stop feeding the bubble. So even if they pause, we're not going to go back to normal. The stock market's going to be on the weak side, but a pause would be the smartest policy right now, because coming back from tightening and going to easing would really look really bad for the Fed. Recessions are more important than booms. I was a turnaround management early in my career. I went from Bain & Company turning around Fortune 100 companies to doing the same thing with new ventures in California. It is only in crises that people really innovate. We always have crises. Like why did God create thunderstorms and lightning and all this stuff? If we're not stimulated by adversity now and then, or get in a crisis, we don't wake up and really innovate and re-look at things. We would rather just float down the river and hope that everything rains on our head and everything comes easy. So these crises are part. You can't have booms without busts.
Right.
We cannot be awake without sleeping to restore. So this is just the natural cycle. We have now taken an economy that has boomed so long, it needs a rest. We need to flush out bad debts. You know how many the biggest growth industry is zombie companies. Companies that are barely alive only by not paying their debt service, but even without paying their debt service, they're just barely alive. So that's bad. Economy, free market capitalism works because you let people pursue success, but you also flush out the failures. George Gilder is my favorite economist because he says failure is the secret to capitalism. State-run companies never flush out their own state-owned industries and let them get fatter and fatter and less efficient until they fail. Free market capitalism relies on failure as well as success. So we're not allowing the failure, and we haven't since 2008. This is already set in the cards. We just need to clear the decks to optimize. The millennial generation has their spending wave, like the baby boomers did from 83 to 2007, the Bob Hope generation before them, 42 to 1968. Well, this generation is shorter and smaller relatively. Their boom is 2025 through 2037. So we will go in the U.S. into another boom. Now, of course, who's going to be booming more than us, who has many more people and many more younger people? It's all of Asia, okay? Not Japan, not China. China already is peaking in their demographics currently right now, actually already, and will continue. China's going to go, now listen to this, by 2100 from 1.4 billion people down to 770 million. Okay, they're going to lose hundreds of millions of people. They're going to be the first emerging country to peak in demographic trends and go down, down, down. Developed countries all peaked decades ago, and one after another has been slowing down. But China's going to slow down more than any country in history. So again, this is another. So we come out of this. China's not going to lead coming out of this like they did. It's going to be Southeast Asia and all those countries, and India is the next super large country that can urbanize and grow at 1% a year, urbanization and go up. So it's going to be the U.S. will do best in that boom I'm talking about than Europe, because we have stronger demographics, even though they're weakening. And India and Southeast Asia will do much better than China. China will never come out of this the same, because here's the secret to China. They so overbuilt their economy. I know people have heard about it. 22%, now that was a couple of years ago, it's probably higher. 22% of their homes and offices are empty. They just build stuff to stimulate the economy. They don't print money, they print condos. That's my word for China. That's how they've been stimulated. So China comes back out, they're going to never need to build a new house or office building ever again in a country that's already peaked in its population and its whole spending wave and is going to do nothing but go down for decades. I mean, for as far as the eye can see, China is done. Not only are they done, they over-leveraged with all these empty housing. They've so over-leveraged that even the 20% that have yet to move into cities, they already have enough to accommodate and no need to build for. So China will never see what it's seen again, and the boom will continue to shift as it has for hundreds of years, east to west. So it'll go to Southeast Asia and India. You've already seen the best of China because they cheated and overdid it. It could have been another decade or so, but they already overbuilt for the future. So China will never be the growth engine it was in the last 30, 40 years. And that will come from Southeast Asia and India. And India, after I'm dead and you're dead after me, China will be the largest economy. One day, around the 2050s or 60s, India will be the largest economy in the world. And the US will still probably be a little bigger than China. First Asian countries to accelerate, especially Japan first and South Korea. And as soon as they got rich, they just stopped having kids. The birth rate is 1.3 in China, 1.2 in Japan. 2.2 is to just keep your population at the same level. These countries Japan is collapsing before our eyes, has been for a couple of decades. China is going to collapse just as fast over a longer period of time. This has never happened in history that we've gotten so affluent that we stop having kids and you can't grow down the road.
Well, I mean, China also had the one-child policy enacted for the longest time.
And you know what?
So,
they took it away, Michelle.
Yeah,
they
did.
lifted that. You know how many babies they had in response to that? Less.
Yeah.
Once you've had only one kid, you realize, oh man, this is a good deal. 2 or 3 are just 2 to 3 times more expensive. So it's hard to get somebody that's done that. The lifting the child restriction in China did no good whatsoever. Why? Because they've gotten more affluent and they're aging. They're the fastest aging emerging country in the world, and aging leads to slower growth. So aging means more and more older people. More and more older people means less births. So it's a reinforcing cycle that gets worse and worse. And again, never happened globally in history on any large scale. The countries got so affluent that they aged rapidly and then declined because of aging.
Gold is going to be running to mommy, and gold has more downside than most commodities that have already crashed a lot.
Yeah, only because commodities have already largely crashed and gold has held up. Now, what I'm saying is exactly what happened in the 2007-8 crisis, okay? When stocks peaked in October 2007 and started to go down, gold held up and actually drifted up. Gold was seeing itself, okay, we'll be the safe haven when things go down. We're going in a recession. Well, gold then crashed in the second half of 2008. Gold followed commodities and stocks down and crashed 45% in just a matter of 3 or 4 months. So gold was held up the longest, just like now. It's flat to up, but it went down not as much. It still didn't go down as much as other commodities, still didn't go down as much as stock, okay? But gold ended up crashing and crashed rapidly. So gold is not the safe haven. I'll tell you what the safe haven is. Anybody looks at it, was 100% crystal clear. The highest quality long-term bonds in the world, U.S. Treasury bonds. 30-year Treasury bonds would have been the best thing to hold in the 2008 crash. They would the TLT, which is an average of 10 and 30, went up 45%, precisely when stocks and gold and everything crashed together the second half of 2008. The 30-year would have gone up more than that. I'm predicting that the bonds recently will double. The TLT could double from its recent bottom at 92 in going to 186 in the next year or two. The safest bonds in the world are actually what appreciate the most when a financial asset bubble goes down and all other financial assets go down. leaving the safe haven. And again, same thing. Gold might be the last one to go down, but it'll go down in the end, just like it did before. I'm predicting gold goes down to 900 to 1,000. That will be a lot less than commodities again, but that's still a 45% fall from here. So anybody thinks gold's going to protect you here, good luck.
You have in the past said that you do expect Bitcoin to also not weather this crash, that it's going to go down.
The most.
The most.
It's the biggest bubble, so it's bubbled the most, and it already has gone down. It's gone from 69 to 16. My prediction, and people, even I know a lot of crypto people down here in Puerto Rico. They think it's going to 10 to 11. The smartest crypto people. I think it's going to 3250. That is simply the last low before the last bubble. Up to it went from 3250 in a year and a half to 69. I think it goes back to 3250, and then we start a longer term boom for crypto. And I think I see it as the next big thing. I didn't get it till a guy speaking in my own conference in a few years said it, Mark Yusko. He defined the crypto thing as the digitization of all financial assets and money. Digitization makes, just like we did with the internet and information, we digitized that and made it available, easily accessible. There's $600 trillion today in financial assets. I'm the only one that knows that number. Ask somebody how many financial assets there are in the world. You won't get an answer. 600 trillion, we're almost there, okay? Digitizing and making that easier to trade and pass around and make more efficient, that is a huge thing. So that's what the crypto thing really is. It's not about having 40,000 coins. All crypto's been so far is new companies can issue a coin instead of an IPO at a tiny price. It's a cheap IPO. And you know what that means? We got a bunch of BS companies out there with cheap IPOs that are going to have to fail. The real purpose of crypto is basically restructuring the entire financial asset. That's the biggest financial number in the world. Global GDP is 100 trillion roughly. Financial assets, the biggest multiplier, $600 trillion. That's why I'm bullish on Bitcoin and crypto. But baby bubble in the early stages, just like the dot-coms 22 years before them. So I also see crypto like the dot-com revolution, online retailing, not just internet, but online retailing and sales and business. That was a big bubble and a big burst, 2000 and 2002 burst. This is the bubble burst of the crypto bubble. Crypto is simply the biggest bubble of bubbles here. And so it'll crash the most. 3250 will be down 95, 96% for Bitcoin. And then it will lead the boom. So if I had to buy something at the bottom, I wouldn't buy IBM, or the NASDAQ even. I would buy Bitcoin and Ethereum, the leading surviving cryptos out of many baloney companies. But what governments do is they always overborrow, overspend, overprint money. That's the whole point of crypto. You have a global standard that is not manipulatable. Bitcoin is fixed. That's the secret to it, okay? That was the genius of that guy, Satoshi or whatever, that came up with this thing. Something needs to be more fixed that could be a real standard. If you can print a standard, it's not a standard if you can manipulate it. That's why the dollar can't be the currency, especially as we move towards Asia dominance and stuff. That's why I see Bitcoin is the only thing that could be a new effective standard, and it would have to be worth $500,000 to $1 million per coin to be there. The central banks that do nothing but manipulate and cheap and print money out of thin air to grow, or something that could be a new emerging technology that's already...
So you're not concerned by regulation?
I'm betting on Bitcoin winning, not the damn central banks. I want the central banks to fail so bad they go back to just making enough currency and money available and quit trying to run the economy from the top down, as if any of these people who never had sex or run a business know anything about the economy, and they don't. Find me one Federal Reserve chairman that's ever run a business. I'll leave out the sex part.